Excellent. Over to you then. Over to you, Matt.
Perfect. Well, good morning, everyone. Thank you so much for having me today. Hopefully you'll find this a little bit informative, bit interesting. Hopefully it will give you a bit of insight as to what we're talking about. So the whole purpose of today's session is talking about putting cover on expenses. So I'll briefly explain what I mean. So before we start, though, let me tell you a little bit about company protection, myself, on what we do and how we might be able to help you guys. So we don't really worry about things like computers or offices or premises or that kind of stuff. That's not what we're about. What we're about is people. So at Company Protection, we protect people because after all, and I think you'd agree with me, people are pretty much the lifeblood of any organization, and they're usually pretty critical and key to its success. So essentially what we do at Company Protection is we advise on a range of insurance contracts, but they fulfill one of two purposes. So the first one is company protection. So these company solutions, they provide essential financial support to a business when it loses a key member of staff to illness, injury, or death. And that might also include the business owner itself. So these core company protection solutions, what they actually do in theory is inject cash into the business that can be used to pay off debts, replace the profits of the individual, or use the money to, say, recruit a replacement member of staff so the business can get back onto its feet. Now, they can also be used as well to buy shares back from the estates of deceased stakeholders. So that means the remaining owners can then keep control of the business, keep the shares, and the family get compensated. So the things to remember there, those kind of three products are key person insurance, shareholder protection, and company loan protection. Those are core business solutions. They protect the organization and its people if someone key to the business was to die or get seriously ill. So you may have heard of some of those before. I mean, key man or key person is banged around and spoke about quite a lot. So you may have heard of those before. And then the second thing that we do, where we focus again on people, are what I call personnel solutions. So these are potentially tax efficient and cost effective ways of protecting the owner and the employees from the very same risks, but where the benefit is for the individual and or their family. So the one is for the business and the other one's more like an employee benefit. So these are the ones that we're going to talk about today. Those personal benefits, the one that are set up and paid for by the business, but actually the real benefit, the core value.
To jest, miało to miejsce w poniedziałek, bo zawsze na początku tygodnia mamy taką zwiększoną liczbę, ale obserwujemy jedno pozytywne zjawisko. To pozytywne zjawisko to jest właśnie utrzymanie dynamiki wzrostu z tygodnia na tydzień liczby nowych przypadków. Dzisiaj ta liczba, która wynosi 3 nowych przypadków.
Yeah, mutual.
Although that means you might mute Matt.
Yeah, that's the only problem.
All right, 1 second. Is everyone there?
Yeah.
Perfect. Sorry about that, guys. So like I say, this particular one that we're going to talk about today are where the benefit is for the owner or the employee, but the contract is still set up and paid for by the business. Okay. So we offer a range of products that can be used to put personal cover on expenses. Now, the key thing here and the thing to remember about these types of products and why they're really useful is because they can also help attract and retain key staff. So if it's for the business owner themselves, that's perfect. But it may also be a really clever way to talk to business owners about how they might be able to attract and retain key people in the business, because we keep hearing this conversation around the Great Resignation, and we keep hearing about the fact that people are becoming more aware of their value. And post-COVID, there's a lot of moving around of personnel and a lot of change of jobs and professions. So these kind of products can also provide a little bit of an employee benefit as a very clever tool to attract and retain people in the business. So the ones that we're going to talk about today are things like relevant life insurance. Okay, so you may have heard of that before, you may not have done. Essentially, that is just a tax efficient private death in service policy. So it's really, really ideal for directors and smaller businesses that potentially don't qualify for what we call a group scheme, where you have all the employees covered under the same one. And it's really good for directors and high earning individuals because it doesn't fall foul of the lifetime pension allowance. And that's really important for high earners. And then the other one we're going to talk about today is what we call executive income protection. I know it's a bit of a mouthful, but essentially what this is it's a private sick pay policy. So it's almost like having a private furlough scheme that provides a replacement income if the director or the key employee can't work due to any kind of illness or injury. And then the other ones you can think about are things like private health insurance, group income cover, group life insurance, and group critical illness. Right, next slide. Today, we're specifically going to be talking about these two that you see on the screen. So you see the orange circle. That's basically going around relevant life plans and executive income protection. Now, these plans, they provide a financial benefit to the company owner or the employee, whoever the life assured is, in the event of their death, if they get ill, if they're unable to work. So they're essentially personal solutions like the ones you would take out through your mortgage advisor or through Compare the Market, the kind of policies you'd have that would provide benefit to you and your family if you were ill. But these can be put on expenses. So unlike personal policies, they sort of blur the lines a little bit because they can be taken out and paid for by the business. So that's a really great option for you to be able to offer to your clients, especially right now whilst people are concerned about money, whilst people are concerned about costs, because it's a great way of transferring the cost of something personal over to the business in a legitimate way. Okay? Right, so the purpose of today's webinar, quite simply, is just an introduction to these two specific products, because I could probably overload you with loads of information about all the different types of solutions. So I think it's best that you guys get a really good handle on these two specific products, because it will mean when you're chatting to your clients or you're chatting to business owners, you can introduce them to these ideas as something they might want to consider. So particularly if your clients have got like large corporate tax bills, this is a great way of transferring the cost of something personal over to the business and help reduce that corporate tax liability. So these two specific products are really good because they'll enable you to have those conversations about how your clients might want to start putting their personal cover and expenses. So from this session today, and hopefully I won't take a huge amount of your time up, but I kind of hope you understand the different types of solutions available, but specifically how through relevant life and executive income protection, your self-employed clients or your director owner clients could potentially put their cover and expenses or offer their employees with a tax efficient employee benefit. Now, we're going to learn how these cost effective and tax efficient solutions so that you guys can talk about them with confidence. That's the most important thing. You need to be able to feel confident that you know what you're talking about. You don't have to know the product specifics or exactly what they work and the underwriting and everything, but just conceptually, what do they do and why might you want to refer the clients over to us to have a chat? So hopefully you'll get to grips with those products. Relevant life plans, executive protection, how do they work? What do they do? And then hopefully you'll uncover the value and the concept of company protection so you can have those conversations with your corporate clients with a relative amount of confidence. Now, obviously, we're always here to help, but if you've got a good understanding, you're probably best placed to have those conversations with your clients. And hopefully, I'm also going to explain how you can uncover the value of that and how it can add to your proposition. Hello, Bazina.
Yes.
Hey, to mute, please.
What?
It's saying Bazina's coming up as the one who's talking. I might be wrong, so I apologize if it's not you.
Okay. Sorry.
It's okay, no worries. Thank you. Yeah, sorry guys, didn't mean to go off there. So yeah, essentially, we'll hopefully teach you guys the value of these propositions so that you can add them to your portfolio, and then what you'll have is something you can then offer to your clients as value added. So of course, it just adds to the nature of what you do, and hopefully it will stop clients even considering looking elsewhere.
Not very happy.
Well, so, hi Ian, I think you're off mute as well now.
Yeah, I'm as I say, I mean, nobody was letting me in. I had to sort of try and get hold of somebody to let me in. I don't know what was going on. I thought there's a break. I thought the system had broken down.
Oh, okay. You were right there. Can you see everything? Is the screen working?
I can see everything now. I don't know why. I asked to be let in. I've been having problems with my NHS account and everything.
Oh dear.
And I've now been, you now finally allowed me in, sort of thing.
All right, we have recorded it, Ian, so we will be able to send you a recording after.
Lovely, thank you very much. Cheers.
No problem. Yeah, so just to summarize here, and I'll keep it really simple so for everyone who's watching, sorry you missed the beginning, but long story short, my name's Matt Chapman. I work for a company called Company Protection. So we do insurance products that protect personnel. So we sort of split them into business ones and personal ones. And today what we're talking about is some policies that essentially help business owners and employees put personal cover on expenses. So I'm kind of just summarizing what we're doing. This was just a slide just to explain why it makes sense to try and put cover on expenses. and how important it is that essentially if we can transfer the cost of that right now over to a business and do it in a legitimate way, it's something that's really useful for you guys to be able to offer to your clients. So the whole idea behind it is trying to add a bit of value to what you guys do as bookkeepers. So when you're having those conversations with your corporate clients, you kind of know where to put this in. And I recognize that you guys have got plenty of work to do yourselves. Being a bookkeeper can be very challenging. You've got lots of things you need to consider. So I don't want to burden you with stuff. It's trying to keep it really simple and showing you guys a couple of ideas of how, when you're chatting to your clients, you might want to add them a little bit of value and say, have you thought about potentially transferring the cost of any personal products over to the business using these types of products? You can then refer them over to us and we'll have that conversation with them and kind of guide you through that process. So yeah, thanks for joining anyway, Ian. Sorry that you had trouble getting in. So why bother putting cover on expenses? What's the big deal, right? Well, there are so many reasons why people set up their business, right? So when you speak to your clients and you're chatting to business owners about why they ended up going into business in the first place, for most people, it's this lure of working for themselves, right? The idea of earning a really good income and achieving the financial independence that comes with running your own business that's probably most attractive. But running your own business is very hard work and it's very demanding. I'm sure you guys all know this yourselves. You put a huge amount at risk when you work for yourself because there's no plan B, there's no bailout, there's no safety net when things go wrong. So when you work for someone else, generally speaking, they sort of shoulder the responsibility of keeping the company running. You do your job, you get paid, and the income you receive pays for your home, it pays for your lifestyle and everything else that you hold dear. But if you work for yourself, you risk losing everything if something goes wrong, not just because it's your income, but the very business that you've spilt blood, sweat, and tears building to try and create something for yourself. And we all know how important it is to have cover that protects yourself from those illnesses, injuries that impact you and protecting those that you love as well in the event of your death, for example. We all know how important it is. That's why we have life insurance and all these things. But for those people who work for themselves, that problem is massively amplified because there is no safety net. Like I say, when you work for someone else, you do have a bit of fallback position. The government often provides additional support as well. But for self-employed people, you're highly exposed when things go wrong. Now, these particular solutions we're talking about today, so these company solutions such as Relevant Life and Executive Income Protection, they offer business owners with the perfect solution to that problem. Because if you can imagine, you can take out cover that's going to protect your family from financial disaster. If you get injured, if you fall ill, if you can't work, or you die unexpectedly, it's going to support them and continue to offer them the lifestyle that you've been working so hard to create. But imagine you can then get the business to pay for it. That's got to be a win-win, right? So imagine if you could take the cost of insuring yourself away from your wallet and get the business to cover the expense instead. Now, as I think that sounds really, really good. And I'm sure that for most business owners right now, that sounds very attractive, especially with the cost of living crisis that we're going through. So I'm going to talk very quickly about something called dissociation. And this is to do with the psychology behind why it's really clever to talk about putting cover on expenses. So essentially, the process of dissociation is to sever the association of one thing from another, right? So by enabling somebody to take out essential insurances that they need for themselves and their families, but allowing another entity to pay for it, we're able to create dissociation of the cost from the individual. Because yes, of course, the business is paying, but in their mind, psychologically, the business is paying it out of its gross earnings. Right, so the individual is able to transfer the cost of their protection to the business, and in doing so, their perception of cost is almost instantly changed. So the client sees this ability to put their cover on expenses as a real win, especially right now with, like I say, with that cost of living crisis. So if you think about it, if you're able to pay a personal protection policy, if you're going to pay that normally through your own personal expenses, right, you've got to draw money out of your business, on which you'll be required to pay taxes, national insurance, and other costs to the insurance company, including insurance premium tax. And then when they pay the policy again, like I said, you've got this insurance premium tax on top. So you've got this stack up of costs. So in order to have the net money to pay those premiums, you've got to draw money out of the business and incur lots of tax liability on top. Whereas if the business is eligible to pay the premiums, this could have the opposite effect because it comes out of the gross earnings of the business. I mean, first, they don't need to draw any money out and pay tax on it. And secondly, the company is able to offset the cost of this against its profits, thereby reducing its corporate tax liability because it's a legitimate expense. But even if you're able to ignore the tax efficiencies, you go, oh, ignore the tax efficiency. The fact that we're able to dissociate the cost and arrange for the premiums to be absorbed by what is in the client's eyes a third-party entity removes those barriers to sale, and it increases the value of those contracts to the client because they don't perceive that they're paying for them personally. So suddenly premiums become suddenly less of an issue. If you say to a corporate client, you're paying this much and it's coming off gross earnings and it's going to offset against tax, they're usually pretty happy with it. If I say to a personal individual, it's going to cost you the same, usually thinking, oh, I've got to earn £200 to get the £100 to be able to pay for it. So it's a completely different kind of conversation. And that in itself, as bookkeepers, creates this really fantastic discussion point between you and your clients, because you're able to signpost ways in which they can not only save tax, but transfer the cost of these personal insurance needs over to their business in a legitimate way. So as bookkeepers, what that does, it demonstrates that you've got a vested interest in doing the right thing for your client, but ultimately helping them to save money and save tax, but without compromising their cover or their options. Okay, just goes to show the great service that you're providing as bookkeepers. So we'll start with relevant life. Before we go any further, has anyone got any questions? Anything want to raise? Can everyone see the screen? Okay, everyone good? If you do have questions, by all means, stick them in the chat or just unmute yourself and by all means ask. It's not a problem. Happy to take questions as we go. So what we'll do, we'll move into relevant life now. We'll start with this one. And as I said a minute ago, in simple terms, relevant life's a very effective way, cost-effective and tax-efficient way for business owners or employees to take out life insurance. It's designed to pay a lump sum on death or diagnosis for terminal illness. That's an illness that's in theory going to kill you within a 12-month period. So it pays out a lump sum, much like the life insurance probably many of you have for your mortgages or for your family. It's very straightforward. It's very cost effective. Relevant life can also be tax efficient for the business and the employee. So think of it like private death in service. Now, in a minute, I'm going to go into why it's such a great product and the additional advantages it offers over, say, group life insurance. But for now, don't let the name fool you. It looks really complex. What's a relevant life plan? It's essentially just life insurance. It's the same sort of term life insurance that you get anywhere. It just means it's normal life insurance. It's taken out over an agreed period of time. And in that regard, it's probably exactly the same as what you guys have already got privately for your mortgages, etc. The only difference is that these plans are taken out and usually paid for by the business on behalf of an employee or the business owner rather than the policyholder themselves. They could be used to ensure the life of any employee of a UK business, including self-employed limited company directors. So it's brilliant for business owners because you can put your life insurance away from your personal expenses onto the business. And just to clarify, it doesn't matter what classification of business is there, provided there is a legitimate relationship between employee and employer. So in the case of a limited company, the reason it enjoys tax relief is because you've got limited company entity, and even if the individual that you're insuring is the employee, owns 100% of the business, in the eyes of HMRC, there is a legitimate difference between the two. Okay, so providing the life assured is an employee and paid by a PAYE, it doesn't actually matter if they work for a sole trader, a partnership, a charity, a limited liability partnership, or a limited company. But just to be clear, partners and members of limited liability partnerships and sole traders can't take it out because there's no relationship between employee and employer. They're the same thing. Okay, that's not allowed. But anyone who's salaried, anybody who's salaried, that's limited company directors, employees, and salaried partners are able to take out this cover. The key word there is salaried. Okay. Now, these plans are highly tax efficient. They're usually always classed as a business expense. Hence, like I say, the need for that employee-employer relationship I mentioned a moment ago. So they're super tax efficient. I'm just going to briefly show you so you guys can get your heads around the tax advantages compared to a personal life insurance contract. So the unique way in which they're established essentially means that the business may be eligible for these savings, right? So this table shows the comparative costs for the same plan taken out as a personal one. So you see the normal non-relevant life policy versus the relevant life plan. And this is for a salaried director of their own business, okay? So you can see the total cost of the plan, the personal plan in the middle on the left-hand side, taking into account the tax they pay, the employee national insurance contributions. And then the second column on the right, the blue one, shows the relative savings for the relevant life plan, highlighting the fact that there is no income tax, no national insurance payable, and the premiums are paid directly from the business, thereby reducing its corporate tax liability. So this is a fairly extreme example, but these are two identical policies. So the assumption is the annual premium is £1,000. And if you see what the actual cost to the business is, adjusted, taking into account corporate tax, you'll see it's nearly £1,600 for the one individual because they've got to draw the money out of the business. Whereas if the company pays the relevant life plan, it's going to cost them 800 quid. Now, it's a significant saving, and it means that individual can put that life insurance contract through the business. It's a fairly extreme example, but it does show that the relative cost is roughly half for business owners. So if your clients are paying for their life insurance personally, this table can really highlight to them how much more cost effective and tax efficient it would be compared to having normal cover to put it through the business. Now, normally the premiums are exactly the same. So just so we're clear, the premiums are identical, whether you pay for it personally or whether you pay for it through the business. It's the same policy, the same amount, the same term. The only difference is one's coming off gross earnings and the other one requires you to draw money out of the business to pay for it. Right? So it's just so much more cost effective. And this way the business can also have the added benefit of reducing its profits and its corporate tax liability as well. It's a bit of a double whammy in many respects. So what are the key advantages of relevant life plans over other policies, say, for example? Well, some of the advantages, or little less obvious ones, is how they compare to, say, something like a group life service. So you'll find with businesses of, say, 2 or more employees, often they'll have what's called a group plan. So a group policy would be where you bundle all the employees together and they have a set amount of life insurance. And that's really useful. It's fairly cost effective. It is also fairly tax efficient. The challenge comes when the individual leaves the business, right? Or if you've got a business that doesn't qualify for those benefits. Because most providers these days, well, you need to have 5 or 10 employees. So I know, like say, Legal and General and Aviva, you need to have 5 or 10 employees to be able to qualify for a group scheme. So if you've got a business which is a couple of director owners, or you've got a small enterprise, this makes so much more sense. So some of the advantages are those companies that don't qualify for group schemes, those with 1 or 2 employees, or even less than 5 or 10, it's worth looking at these as an option. They offer much greater long-term flexibility and security to the employee or the person who's being insured, because when you have a group scheme, if you leave the business, that policy gets cancelled. You can't have death in service if you no longer work at that company. But if you've got a company director who then winds a business up and sets up another one, relevant life plans can be ported out and taken over by another business, or even by the individual if they choose to leave. Now, that's really important, because when you take out an insurance contract, it's underwritten at the beginning medically. And if something happens to you during the term of the policy, it may be really hard or impossible for you to go and arrange cover another time. So if you take out a policy like Relevant Life, you know you've got the security of having it all the way through to retirement, because wherever you work or whatever you do, or even if you shut the business, you can still take over the plan and keep that policy in force when it's been underwritten. So for those people who are getting older, for those people who are potentially at risk of developing heart disease or cancer or something, it's really useful because it means they can always have life insurance, even if they leave that business or wind the company up. So it's not just fixed to that moment in time where you've got that business, they can take over the plan personally if they choose to leave. That's a really important consideration for those who have medical conditions or experience them during their tenure, because they might not be able to get cover elsewhere, or they could be left uninsured if they even leave the company. Right, so that's a really important thing to flag up. Now, each plan can be set up individually based on the individual's package, and it could be placed on risk at different times. The problem with the group scheme is, generally speaking, you have to have certain amounts and group people together that way, i.e. 4 times salary or X amount or whatever. The beauty of Relevant Life is that we can do it individually for every single person. So you could say, right, I want that person who's joined the business. I want in 3 months, I want them to take out a plan. They're leaving, I want to cancel it. Group schemes generally work either quarterly or annually. So if someone leaves the first day of the new year, you still have to pay their premiums for a whole year before you can take them off the plan. These are individual life insurance contracts. We can manage them at an individual level. That director wants it, that person doesn't. No problem. We can do that one. We can do that one. We can cancel that one. We can take out a new one. You've got a new employee, we can do another one. They're individual policies. So we don't have to worry about having plans that you're paying for that you can't use, or people coming and leaving the business. It's really important to have that flexibility for businesses that have varying salaries and a high turnover of staff. So if any of your clients are like that, this makes a lot more sense. Now, like I say, under the current rules, the benefit from a relevant life plan doesn't count towards someone's pension, lifetime pension allowance, but they do in a group scheme. Now, that's really important for directors or hiring individuals, because their family could be stung with a really big unexpected tax bill if you don't take that into consideration. So these are better products for high earning directors. it's much more sensible for them to have a policy like this than it is to go on a group scheme that could leave them with a tax liability. Now, most providers will require you to place the policy in trust at outset. So that's something that we deal with. We do it free of charge. Most of them won't even activate it until it is. Now, this is really, really good because it forces advisors like me to do the right thing. And it also ensures that the benefit won't form part of the deceased estate or create an unwanted inheritance tax liability. So having the policy in trust is really important because we always know the right money is going to go to the right person at the right time, won't get caught up in probate, and we know it's going to get routed straight through to the right individual. So it provides an extra layer of reassurance. Now, the other thing to bear in mind is a lot of these plans often include what they call value-added services. So AIG has something called Smart Health, or you've got Red Arc. Liverpool Victoria have a host of things, and they can include things like 24/7 GP services, counselling, physiotherapy services, and that offers another layer of benefit and support to the employee or the director beyond that core cover. So in many respects, it's almost like another employee benefit. In that sense, relevant life plans can be used as a value-added employee benefit to attract and retain really good staff. Right, let's move on to executive income protection. I hope I'm not boring everyone to sleep with insurance talk, so I do apologize. I'll try and keep it lighthearted. So executive income protection, this is one of my favorite products in the whole wide world. It's absolutely brilliant. I'm a huge advocate for income protection. I think every working adult in the UK should have a policy like this. This one is phenomenal. So Legal & General and Liverpool Victoria launched their products about 1.5 years, 2 years ago. They're fairly new to market. There are other providers as well, but this is becoming a really important topic for people. So executive income protection contracts, essentially all they do, it's like permanent sick pay. It provides a replacement income if that employee or that company director is unable to work due to accident or illness. So it's a bit like furlough. The benefit is paid directly to the business, who then continues to pay the employee, the company director, until they're able to return to work. And if you specify a full-term plan, that could be paid all the way through to retirement, meaning you can provide a permanent sick pay solution to owners and staff, but again, paid for by the business. What an amazing employee benefit that is, to say to someone, in this job, you will have a permanent sick pay plan. It means if you can't work, we will still pay you and you can still pay your mortgage. Now that can be for the director, so they can do it as an employee benefit, or it can be for the key employee in the business. Now that is a phenomenal thing to offer people right now, to say, I can give you income security until the day you retire, and I'm going to put that on expenses. So that's what I said. It's actually exactly the same as normal income protection, but it offers a much higher level of benefit. So normal income protection that you take out personally, that you'd have as an individual, you'd be able to insure up to around 60 or 65% of your gross earnings. Executive income protection, the one that's come through the business, you're able to insure up to 80% plus national insurance contributions plus pension contributions on top. So it's especially good for directors and high earners that need to replace as much of their income as possible if they find themselves incapacitated. So if you've got clients that earn a lot of money and have high expenses that match it, which most of us usually do, this is a great product compared to a personal one because we can just insure so much more of their income. Now, it can, like I say, it can be specified to include national insurance, pension contributions, thereby offers this really fantastic form of long-term financial security for business owners and their employees. So why is a replacement income so important? Well, I think it was pretty obvious when we went through the lockdown and Rishi Sunak came out with this furlough scheme that without it, we'd have really struggled, right? Who doesn't need an income?
Tak.
Especially right now.
Dobrze, tak.
Sorry, you got a question, Alicia? Did you have a question? Sorry. So at the most basic level, we need an income to survive, right? We need an income. We have bills. If you think about the most 4 fundamental necessities we need as humans to survive, you've got air, water, warmth, and food. And if you consider the only one of those that's free is air. The other 3 cost money and require us to have that.
Tak, może pani jako koszt to policzyć, tylko musi pani rachunek mieć, albo prawidłowo z konta biznesowego powinno być zapłacone.
Alicia, thank you.
She's done
So
it.
it's therefore fair to say that in this commoditized world that we need an income, right? Everybody needs income just to survive. And as I said, if you think about it, Rishi Sunak didn't just give you a lump sum of money and say, hope for the best, guys. He gave us that regular form of income, right, as furlough. And it was because the understanding is that the bills don't stop even when we do. So the best way to think about executive income protection when you're thinking about this, when you speak to your clients, is it is essentially a private permanent furlough scheme paid for by the business that can offer you permanent furlough benefit, right? But it's not just COVID, it's anything that stops you working: cancer, heart attack, stroke, MS, anything. So it's one of those really good policies that's going to provide real tangible value and put on expenses through the business, right? The beauty of executive income protection is that it works just like a personal income protection policy, but it's so much better. There's only a few providers offering this at the moment, but with this renewed focus on income replacement solutions right now, I'm pretty confident that we'll see far more coming to the fore, but I've got plenty I can use. I've got plenty of providers that we can look into. And the reason that income protection is so much more favorable is it doesn't just protect more of the client's income, but we can put it on expenses and get the business to pay for it. So as I say, most providers cover up to 80% of salary. That's salary, dividends, P11D, and then you can add pension and NI contributions on top. Now, a standard personal policy will pay, like I say, 60, 65 at best. So like I say, really important for high earning individuals that want to protect as much of their income as possible. Now, long-term illness and permanent incapacity is a very real issue. The average claim on an income protection contract is 7 years. Now, when I say 7 years, I haven't taken into account that more than half of policies sold only pay out for 1, 2, or 5 years, which means the real figure is much higher. And the rule of thumb goes that once you've been off work for around 3 to 4 years, the likelihood is you will never be able to return to full-time gainful employment again. So this is a real important issue for people. And income protection provides the perfect solution to give people financial security if they find themselves unable to work for any length of time. And the beauty is if we can put it on expenses, that is phenomenal, right? The other thing to bear in mind is because we've got a policy that's going to pay out this replacement income for their entire working life, and we can include pension contributions, what we're doing is we're ring fencing the policyholder's pension as well. Because they can continue to make pension contributions whilst they're off work, you're actually safeguarding their quality of life in retirement as well. Even if they stop working and never go back, you're still safeguarding their future. So as an advisor, that's the kind of holistic thing that I want to look at. And then because I can ensure a much higher percentage of the client's income, coupled with the fact that the business is paying their premiums out of gross earnings, clients are usually happy to pay for the full-term plan due to that disassociation effect that we were talking about earlier. So it means it's much easier for me as an advisor to give someone lifelong financial security, do the right thing by them, and get it to offset the cost against the business profits. So remember, it's not subject to income tax, right? So in a personal policy, when you've got a personal policy, you receive the benefit from the provider and you don't pay income tax on it. Executive income protection is different because it's paid to the business. And the reason it gets tax relief is because it's paid to the business as a trading receipt, or in other words, it's income to the business. Then the business pays the individual director or employee whilst they're off work. And that's why it avoids getting subject to corporation tax, because the money will step out the business and go straight onto the person. So you can actually enjoy tax relief on the premiums because although it's coming in as a trading receipt, it's going straight back out again. So it's going out to the employee and you're going to pay the relevant tax on it there. And the employee's paying income tax on it as well when they get it. Now, what's really interesting is when you've got a director who normally earns nominal salary, maybe a bit of P11D, but predominantly dividends, you would think that this will be a problem because you're going to have to pay them PAYE. That's not true. Once the money comes into the business from the insurance company, they can continue to pay themselves nominal salary, dividends, and any P11D as well. So the beauty of that is that you can still retain this tax efficient method of paying themselves even when they're off work. So it limits their income tax liability and means they still get as much of their net income as possible, even if they can't work. And another really important point to note here is there is a provider that allows us. So if you've got a husband and wife couple, for example, who run a limited company, and one of them's on there is essentially a placeholder, i.e. they don't actually work in the business, or they might do a few hours a week, but they're not the real income generator in the business. What we can actually do is we can ensure the main person who works, we can ensure their salary and dividends. And if a lot of the dividends then go over to the secondary person to reduce their income tax, we can actually ensure that person's dividends through this person's plan as well, which makes sense because this is the real risk. This person's the real risk if they can't work. But what we're doing is we're saying, we know you've set it up this way for tax. but the insurance company will still allow us to insure that person's income, even though they're not actually earning it to this person. So there's loads of things we can do where we can actually protect the client in the right way and still enjoy the tax relief that comes with it. So well worth noting. So like I say, what if your client's primarily paid in dividends? Really important point to note. Most providers will state in the terms and conditions that the benefit from these plans when it's paid to the business should then be paid onto the individual via PAYE. However, that doesn't help, like I say, those who normally earn nominal salary and predominantly dividends. This isn't very tax efficient, as they'd incur this massive income tax liability and wouldn't be able to benefit from much of what they're earning because they'll be receiving a lot less net. But once the benefit's paid to the business, the provider has absolutely no control, no oversight, or no legal way to stop the company paying that life assured however they want to. So the owner of the business can work with you in the event of a claim to find the most tax efficient way to replace their income. And it's perfectly legitimate. Okay. So I briefly mentioned it earlier when we were talking about benefits, and another reason why these policies are so good. So not only are we transferring cost over to the business from them personally, not only are we reducing their corporate tax liability, but we're actually now going to add a load of additional benefits into the business as well and the employee. So although I mentioned it, there are a number of additional benefits that come with these type of plans, but they can provide real tangible value. So these days, most providers, you probably know this if you've got insurances yourself, if you look at the terms and conditions, you've probably got a number of different benefits built into them. And what they do is insurance companies do it to try and differentiate themselves from the competition. It's a bit like a bit of an arms race, right? They're all trying to offer the best kind of benefits they possibly can. And they try and lure clients over to their brand. And these are often really good benefits if you don't know you've got them. So you should really look, if you've got any personal policies, have a look at what you've got, because they can include things like 24/7 GP services, urgent counselling. They've got all manner of different things. And in my opinion, these can make all the difference to a business owner who cares for their workforce or for protecting their family. Because yes, we're moving the policies over, and yes, the business is going to pay, but why should you miss out on these opportunities? But these benefits can also be used by the business owner, their immediate family, and often employees of the business as well. Some are for individual benefit, and some are for personal, and some are for the business. So some examples of that are 24-hour care lines, legal and financial assistance to the individual or the business, healthcare support, counselling services, 24/7 doctor services, medical advice, no matter what the concern is, remote GP, prescription services, second opinion, remote physiotherapy, remote psychological services, discounted health MOTs, business legal advice, free access to legal experts with business commercial law. Vitality even offer rewards that have things like, healthy lifestyle things. So they promote sort of healthy lifestyle choices. You get discounted gym memberships, half price trainers, free coffees and cinema tickets, discounts off holidays, flights, and even spa days. Now, one thing to note is many of these things are available at no cost, no extra cost to the owner. So the business owner could potentially have access to all these benefits, and it won't cost them anything because they're paying for that benefit, and these are included additional free value-added services. So when we speak to our clients, don't worry, we will assess the needs and we will make them aware of these benefits. We'll point them towards the most appropriate solutions. You don't need to worry about remembering them or understanding them or anything like that. But it's just good for you guys to know that these benefits are included in the plan, so that when you're talking to your clients and referring them over to us, you understand that we're always going to look at how we can deliver maximum value for them, and they're going to get some return on any investment they make. So beyond the obvious benefits we talked about, namely the ability to put someone's cover on expenses, which, like I say, right now is just absolutely phenomenal. If you can save on tax and cost and you get these additional benefits, right, that's phenomenal for most people right now. It's a really good trigger for someone to say, yes, I'm interested, let me speak to someone. But if beyond that, what I've done is I've put together a list of some of the very simple things that you guys can look for that would indicate that one of your clients really ought to speak to us to get some advice. So these are, are they a limited company with 2 or more shareholders? Because if so, there's a very real risk of trouble if one of them dies or loses capacity, because what's going to happen with the shares? Where are they going to go? Who's going to inherit them? What's going to happen? Do they have any commercial loans, for example, personal guarantees, directors' loan accounts, or other forms of credit or borrowing, including bounce back loans? Because if so, we probably need to protect them against it. Do they have 1 or more key people in the business critical to their success beyond just the business owner? Do they have any key employees that they want to offer these kind of benefits to so they can reduce the risk of losing them? Are they in the process of selling their business, or are they considering selling their business? Because we can help optimize that and reduce the risk. If they've got any new buyers coming in, we can de-risk the business. So these are kind of things that you need to think about, really. And if there's any, if your clients answer yes to any of those, it's well worth referring them over to speak to one of our consultants, because even if we look through the business and say, look, there's absolutely nothing that you need, we're happy that you're completely de-risked, it's still worth having those conversations to help the client understand whether there are any key risks and how they can build some business continuity planning into their business model. So the idea is, essentially, if you can help your clients save money right now, if you can help them transfer the cost of their plans over, why not do it? So the two that we spoke about today, that relevant life and executive income protection, they really could help your clients to cut down their costs and save on tax simply by transferring those personal benefits over to the business. So what I'll do is I'm going to briefly remind you, one, how we work with the IAB, and two, how to refer your clients over to us if they are interested in putting that cover on expenses. So as you may already know, we've recently partnered with the IAB, and Sam's been brilliant in helping me present everything and get everything up and running. And we've been invited to speak at these events. So very, very grateful. So we've partnered with the IAB essentially to provide you guys with access to these products, access to these tax efficient products like the ones we've discussed today, and to help give you guys a bit of support in helping your clients to either put their covered expenses or to de-risk their businesses. So to help you and your clients understand more about the products that we can offer and the need for this business continuity planning, we've actually produced a comprehensive business continuity guide, which we can co-brand and put your logo on, and that you can offer out to your clients. It's just like an extra value-added tool, and you can offer it to your clients, and it just gives them a little bit of information about what to think about. And then if they're interested, they can always come and speak to us. So don't forget to ask for your free copy. If that's something you're interested in doing, it's something you want to send out to your clients, just let me know. Let Sam know. She'll put you in touch with me, and it'll give you a tool to get the conversation started, and you can highlight how they might be able to just put their cover on expenses. So either drop me an email after the session, or just let Sam know you want a copy. And what I'll do is I'll forward a copy on to you. Give me a copy of your logo. I'll produce that for you, and you've got something you can offer out to people. It is very helpful. It does explain a lot. It kind of goes through some of the stuff we've talked about today, and it could be really helpful. And I'll get your own branded version sent back to you, and you can send that to your clients if you want to. Now, over the coming months, I'm going to do a few more of these webinars, probably a few educational ones. I'll hopefully do some articles and a couple of case studies to help you begin discussing this sort of stuff with your clients if you come across clients that you think might need it. Now, in terms of working with us and referring your clients over, it's really important to note a couple of things. One, we don't charge any fees. There are no fees for our service at all, none. It's a totally fee-free advice service for you, for your clients. Instead, the way we earn our money is that we get paid by insurance companies. But that only happens when we successfully place business with providers. And why that's really good for you guys from a credibility point of view is it keeps us honest, and it keeps us on delivering really good service and really good outcomes for your clients. Because if we don't do that, we don't get paid. It's as simple as that. And best of all, we are sharing a percentage of whatever we earn with you guys. And this can be quite lucrative. So essentially, you're going to get paid for, one, doing the right thing, two, providing value-added services to your clients, and three, helping your clients cut costs and save on tax. So what's not to love about that? Okay. If you think you've got any clients that would be interested in speaking to us or that would benefit from having a chat about putting their covered expenses, you can visit the IAB webpage, and obviously just fill in the contact form. You can email me, which is info@companyprotection.co.uk. I'll put that in the chat in a minute. We can communicate that way. And we're happy for you guys to deal with the client directly, or we can meet in a group, or we can do a Zoom session. We can do a group meeting with you there. Whatever works best for you, whatever works best for your client, we're happy with. So that's pretty much it, guys. I've kind of run through it pretty quickly. Hopefully it's made a lot of sense. I apologize for the audio and everything else, but hopefully if anyone's got any questions, by all means ask. I'll stop sharing my screen. Bear with me. I'll put this in the chat so you've got my email. There you go. That's my email if you want to. And then what I'll do is I'll get you a copy of the IAB page as well. But thanks so much for listening, everybody. Hopefully it was informative. Hopefully I didn't just talk about insurances for ages.
Thank you. And people that have taken Matt up on his offer of the branded material to share with clients, we've had some really good feedback on that. So I do encourage you all, if it's a great opener and conversation piece, I think, to share with clients, especially with it being branded as well. It does look very professional. So
thank you, Sam. Appreciate that. Has anyone got any questions?
No. Okay, well, we will be putting a recording of this on our website, which hopefully will go up today or tomorrow. And if you visit the member benefits page on the IAB website as well, Matt does have his own landing page, which will help you connect with him as well and tell you a little bit more about company protection.
Brilliant. Thank you so much, everyone. I really appreciate your kind comments as well. And thanks for attending today. I do really appreciate it.
Thanks, Matt. Thank you, everybody.
Take care.